Thank you very much for coming this evening. If you haven't yet helped yourself to a drink at the back of the room, please do so. My name's Mark Littlewood. I'm the Director General of the IEA. So a very warm welcome to this fringe meeting that we are holding with the Free Enterprise Group this evening, and a particular thanks to Saab Miller, who have very generously sponsored this event and thereby allowed you to free beer or free wine at the back of the room. Just a bit of advertising about other events before we get on with this one. Firstly, if you'd like to know a little bit more about our sponsors, this brochure about Saab Miller is available on the table on the outside. Secondly, tomorrow evening, you won't, I'm afraid, find this advertised in your conference brochure, but we, the IEA, jointly with Forest and Free Society, are organising a series of events at the Manchester Comedy Store, starting from 6 p.m. At 6 p.m. there is an event called A Beer and a Fag with Nigel Farage, in which I will be interviewing Nigel Farage for an hour. There's then a drinks reception and some stand-up comedy from 8:15 p.m. if you don't think the stand-up comedy of Nigel Farage and myself has been done at 6 p.m. So flyers for that event are also just on the desk on the way out. And the second IEA Fringe meeting, which you can find listed in your conference brochures, is on Tuesday evening, and is asking what the Conservative response should be to the entire cost of living question, which seems to be dominating political debate at the moment. Quick housekeeping point: if you've got a phone, pager, electronic device that's liable to make an incredibly irritating noise, I'd be grateful if you could switch it to silence. Well, we've got a great panel here this evening, some of the rising stars of the Conservative benches, and indeed from Conservative punditry, commentary and journalism, to consider a pretty big question. I would ask each panellist to speak for only about 5 minutes each before we take questions from you. Questions are: what lessons can we learn from the recession, or what lessons have we learned, and what sort of manifesto for change is going to be required by the next government, of whatever complexion it is, in 2015 and onwards. We are still living with the consequences of the 2008 crash. We are, of course, no longer in recession. Growth has returned to the economy, but the government will fail in its initial intention to close the entire budget deficit over the course of the Parliament. It will only get about halfway there between now and 2015, so there'll be a lot more work to do. And speaking entirely for myself, I'm surprised that one of the lessons that appears to have been learnt from the recession is that what we need is more subprime mortgages. But nevertheless, there you go. But I'm just here to really facilitate the proceedings, so let me introduce our panel in the order that they would speak. On my far right is Andrea Leadsom, who's been the Member of Parliament for South Northamptonshire since 2010. Prior to entering Parliament, she worked in the financial sector for Barclays Bank and later Invesco Perpetual. Becoming an MP, she was appointed a member of the Treasury Select Committee and has also been very involved in the Fresh Start group of Conservative MPs. On my immediate right is Kwasi Kwarteng MP. He became the Member of Parliament for Spelthorne in 2010, is now the convener of the Free Enterprise Group of Conservative MPs. He's previously worked as a financial analyst, journalist and author. He's taken every opportunity to debate policies since entering the House of Commons, particularly around the spending review, and he also serves on the Transport Select Committee. On my immediate left is Iain Martin, the only panellist, apart from myself, who does not sit on the Conservative benches in the House of Commons. He's recently released a book which I strongly recommend on the financial crisis, Making It Happen, Fred Goodwin, RBS and the Men Who Blew Up the British Economy. He's been a reporter for the Sunday Times Scotland, Deputy Editor and columnist for the Sunday Telegraph, Head of Comment at the Daily Telegraph, Deputy Editor of the European edition of the Wall Street Journal and a columnist for the Daily Mail. He writes for a range of papers, as well as presenting for the BBC on what the papers say beyond Westminster. Next along the table on my left is Dominic Raab. Dominic's the MP for Esher and Walton in Surrey. He began his career as a business lawyer at Linklaters before working at the Foreign Office, covering a whole range of briefs, including leading a team at the British Embassy in The Hague. Prior to entering Parliament in 2010, he was Chief of Staff to the Shadow Home Secretary, then David Davis, and the Shadow Secretary of State for Justice, Dominic Raab. And last but no means least, Skidmore, also a very active member of the Free Enterprise Group, who was elected to Member of Parliament for Kingswood in 2010. He's previously worked for David Woolletts and Michael Gove as an advisor. He's a member of the Health Select Committee, Vice Chairman of the All-Party Parliamentary Group on History and Archives, and has actively campaigned around health issues and educational issues. So please join with me in welcoming your panel. I'm going to ask each panellist to try and stick to 5 minutes. If they run to 6 minutes, I will tap my glass to try and indicate we should wind up. If you run beyond 7 minutes, I will start tapping my glass continually to make sure that you can't hear what you're saying. So, Andrea, can we start with you?
Thank you very much. And what a fabulous audience. I've just been speaking at a Fringe meeting on the importance of early years intervention, and it was rather less interested an audience, sad to say. But this is a huge topic. How do we get growth back in our economy? And as my past experience is 25 years in finance, I'm going to stick to my knitting. And that's not because I'm the token woman on the panel. I'm not actually going to sit here and knit. But I am going to talk a bit about the sort of changes that I think, in order to recover our economy, we need to see specifically in finance. So what we have now is an economy where we are still finding that banks are not lending to small and medium enterprises. We are still finding that they are the most hated institutions on earth. We are still finding that their balance sheets are in bad shape. They are still needing to raise capital. And we are still finding that there are massive barriers to new entry for the diverse financial services that we want to see. So in the very short few moments that I have to talk to you, I want to put out 4 suggestions for what we could do to make the banking system more competitive. And then a final point which has been made before, which as a member of the Treasury Select Committee I fully support. So first of all, we've recently seen the announcement about 7-day switching, where it's going to be much easier for you all to switch your bank accounts from bank A to bank B. The reality at the moment is you're much more likely to get divorced than you are to move your bank account. So it won't be hard to make you more likely to switch. But the trouble with it is that you still, if you switch banks, have to change your bank account number and all of your bank account details. So what I've been advocating, with a lot of support from the Treasury Select Committee, is full bank account number portability. So like when you change your mobile phone provider, you should be able to take your number with you. That would mean you could move bank accounts tomorrow, the next day and the next day. What that would do is to create a level playing field for new entrants. The problem for new entrants at the moment, there are many, but one of the key ones is the competition barriers to entry. They can't get a toehold. Why? Because people don't want to switch to a new bank because of the hassle of switching. Even 7-day switching won't change that. Secondly, very importantly, is that the bank systems are not fit for the 21st century. They're a bit like the Victorian sewers. You might like them to work for central Manchester, but woe betide if you get it wrong, because they are just ancient, out-of-date, creaking systems. The banks are losing billions, tens of billions every year in bank fraud because the systems are so poor. So a shared common utility platform for payments infrastructure is definitely, in my view, the way forward. Thirdly, it's also the answer to resolution. With all the efforts that the government and Basel and the international community, the G20, have made to ensure that a bank will not fail in the future, we all know that one will. And at the moment, there's still no means of resolution. So if we have number portability, you can resolve a bank by simply switching bank accounts from a failed institution to a survivor institution. So it's got a lot going for it. There's been progress in government. The government has agreed to create a new independent payments regulator, because at the moment the banks are the last closed shop. They regulate themselves through the Payments Council, which is owned and governed by the banks. So the government will create an independent regulator that will ensure free and transparent access to the systems. And following that, that payments regulator will be required to do a full cost-benefit analysis of full account portability. If it's found to be as valuable as I'm sure it will be, it's not just going to change the competitive environment in the UK, but it's also a massive business opportunity for UK PLC. The European Banking Authority has already said they would like to see a shared payments infrastructure for the Eurozone. And if we've already created one, which by the way would not be extraordinarily complicated, then that could be a huge business opportunity for us. So that's my first and very important pitch I want to make to you for the 2015 Manifesto and how we get our economy going again. Secondly, again around the subject of improving bank competition, we have massive regulatory barriers to entry. So banks can't get off the ground. At the moment, we have credit unions that can't afford the infrastructure for online banking. The government's trying to do something about that. But for the unbanked, credit unions are absolutely vital as a means to get people and their opportunities to start new businesses off the ground. As are structures like, you might have heard of the Bank of Dave, who is a wealthy businessman who wants to lend to small businesses, has had his opportunities to do that scuppered at every turn by the FSA, requiring him to set aside so much capital that he can't compete. Local authorities, likewise, in my own county, the Northants County Council have lent money to Silverstone. Why? In order to keep the British Grand Prix at Silverstone. That pays massive dividends to the local economy, but the problems they had in actually being able to lend money to Silverstone were enormous. Those regulatory changes have to move, and so I think that would be my second proposal, is regulatory change to ensure that we've got a more diverse financial services sector. Thirdly, capital calculations. At the moment, enormously favour the big bank over the small bank. If you are a large bank with huge volumes, you can calculate your own capital requirements, which basically means that obviously they're very small, aren't they, by definition? Whereas if you're a small bank, the FSA does it for you. So the capital requirements for a small bank, pound for pound, are astronomical, which means that prevents them from growing. It prevents them from becoming big banks. They have to set aside far more capital to lend to a business or to an individual than does a big bank. So that would be my third proposal. And then the final one, and this is fundamental, and actually this goes to the heart of the government's attempts to get banks lending to SMEs. The Funding for Lending scheme dramatically favours lending for mortgages. Why is that? Because of the risk weightings. Because if you're a bank, you can lend twice as much money if it's backed by a mortgage than you can if it's not backed by a property. So it really favours lending to homeowners over lending to businesses. And that risk weightings needs to be looked at, and the Chancellor tells me that he is looking at it. So that's fantastic. We are making some progress. I think that transforming our banking sector is absolutely key to transforming our economy. And I'll leave you with my final, fifth proposal, is that we should give RBS back to the taxpayer. Because when you look at the brand of banking, when you look at what's gone on, at the utter outrage that people still have at banks and at the fact that they're continuing to pay themselves bonuses and so on, the poetic justice of saying, right, well, the taxpayers bailed out RBS, let's give RBS back to the taxpayers. I think that would be a very good way of improving our shareholding democracy and giving people the sense that they've got something back for the massive amount of investment that they've made. Thanks very much.
Andrea, thank you. Kwasi.
Thank you very much. I'm not going to stand here because I fear that I'll probably be overshadowed by these banners. But thank you. What I'd like to say is that my remarks will be really split in two. And the subject that we have to reflect upon today is lessons from the recession. So what are those lessons? What have we learned from the 4 or 5 years in which practically every major economy has been struggling? And I think the first lesson that we should learn, and in fact people have learned, is fiscal responsibility. And what I mean by that is, very simply, balanced budgets, living within your means, not borrowing too much. These are very elementary lessons which somehow, in the period between 2001 and 2010, we completely forgot. Now, I think it's very important that we actually look at what happened in terms of the numbers. 2001 was the last time in which we had a balanced budget in Britain. And it's very unlikely that we're going to be able to balance the budget this side of 2020. And what that means is that we were borrowing and borrowing and borrowing, even while the economy was growing. And when, of course, the economy stopped growing, we had massive costs, our deficit ballooned, and we have to make retrenchments in order to match our tax revenues. What I mean by that is our costs have got too high, and for the next 10 years, certainly starting from 2010, we are having to make retrenchments. And the public understands this. The public understands why we have to make the so-called cuts in public expenditure. And that is why, if you look at any poll, any opinion poll, you will find that our Prime Minister and our Chancellor of the Exchequer are more trusted on the economy than their opposite numbers on the Labour benches. And that's partly because the public has an intuition that we spend too much money in the Labour years, and as a consequence we have to cut back. Now, and another poll question that has been asked is, who is responsible for the so-called cuts? And you'd be amazed to find that a plurality, not a majority, but a large number of people in the largest section still blame the Labour government, because they realise, as I say, that we spent too much money. Now, I've been talking about this ever since I've got elected. I think the biggest lesson is we can never go down that route of borrowing and borrowing and borrowing more. And this is something that Margaret Thatcher understood. This is something that the Germans understand very well, given their history. It's something that the Swiss have actually incorporated in their constitution. They're simply not allowed to run deficits. And I'll tell you a story about this. I mean, I was on the Transport Committee, and we went to Bern. And I don't think any of you here have ever visited a federal government building in Switzerland. And they're very scary places. I mean, they look like sort of vast warehouses. Anyway, an economist there said to me that what we have to understand is that expenditure is always a function of income. And I asked him in the break, I said, what do you think about Keynesianism? And he said, oh, I'm not going to try the accent, but he said, I read about that stuff in university, and frankly, it's completely irrelevant to how we run our budget. So I think this is the central lesson that we've learned, or should have learned, in this period. And I'm struck by the fact that Ed Balls has actually said to the, through electioneering purposes, but he actually has said he wants the OBR to look at Labour's figures. I mean, this is an extraordinary admission of his own failings, really, because they didn't do that. They simply didn't have any restraint on their spending. And I think if we can keep that line, if we can keep the honest housekeeping agenda, if you like, it's not very sexy, but people understand that. People understand what it means to live beyond your means. People also understand what it means to be very prudent. And that's really our golden ticket, I think, going forward. Now, with regard to specifics, I'm always going to advocate supply-side reform. I think our tax code is too complicated. I think if you simplified corporation tax, you could have it at a flat 15% or possibly lower, getting rid of all the loopholes. Now that is something which will encourage investment, inward investment, and will also mean that Britain becomes a more favourable and an easier place in which to do business. I'm fully supportive of Andrea's plans with regard to banking. I just went last week to Metro Bank in Staines. They've just opened a Metro Bank. And that was the first bank, I think, since 1830, high street bank that's been opened. So clearly there are issues to do with freeing up competition and the sorts of account flexibility that Andrew is talking about. The second big thing that I think we should be looking at is startups. We should be looking at small businesses, and we should be thinking about exempting them from business taxes for 3 years. Now, tax holidays are not something that we've done particularly well in Britain, or much, but it works. It works in San Francisco. If you speak to the mayor of San Francisco, he'll say they have 5-year tax holidays, very often for internet startups, and that's the kind of supply-side reform, I think, that we need. And the last thing I'm going to mention, which is very relevant to me as a constituency MP in Spelthorne, which is relevant to Heathrow, is infrastructure. Now, as we've had a recession, inevitably the demand is decreased, and as a consequence of demand decreasing, the stress on infrastructure is not as great as it would be in the boom years. So, as a kind of counter-cyclical policy, it makes sense to invest in infrastructure when times are more difficult, so that you're ready when the boom or the growth comes to deal with that growth. And at the moment, those of you who know me will know that I bang on endlessly about airports. I still think there's an issue with airports. I think we need to expand that. I'm also a fan, more controversially, I know Andrea's here, of HS2. And I know a lot of people are going to be, find that controversial, but I would go ahead with that. But more broadly, I think infrastructure is something which we haven't done particularly well in this country, and that's something where we need to perhaps improve. So my last thought is that, yes, we've got a budget problem. We're going to clearly have to do more reforms, I think, on welfare and entitlements. Those are difficult reforms. They're not very popular sometimes, but in the end, people understand the sense of them. And I think it's responsible government. I think that's what people expect of us. They're not expecting us to be, terribly friendly or terribly, in touch with our sort of inner emotive science. What they expect, what they look to in conservative governments is competence and a patriotism and a sense of a strategic plan, having a strategic plan for Britain's prosperity. And I think these proposals that I've put forward are very simple, and they're very much rooted in our traditions as a party and in our ideas. So thank you very much. Those are my opening remarks. I look forward to taking questions.
Kwasi, thank you. Iain.
Thank you very much, Mark. And now I knew that all of these politicians here on the panel this evening would all be brimful of fantastic ideas for reviving the economy and for the Tories' next manifesto. So I'm going to resist the temptation to compete with them. I mean, the Free Enterprise Group, I should say, they do deserve a lot of praise, actually. They've done fantastic work in terms of setting the agenda. And, I mean, Dominic Raab is far too modest to point this out, but when he, I think, coined the term, that when he suggested that the Conservatives should be on the side of hard-working people, I can remember the fuss. I think it was the Splash in Evening Standard or the Mail, and the Conservatives were denounced, and the Tory leadership distanced itself from the Free Enterprise Group. And now I turn up for conference outside, and the slogan is for hard-working people. That's ahead of the curve. And I mean, I do oppose Kwasi's policy on Heathrow. It's absolutely nothing to do with the fact that I live in Richmond, about 8 miles. So I'm going to resist the temptation to outline my personal manifesto, tempting though it is. Suffice it to say that the next government is going to face some extraordinary challenges. There's still going to be need for further spending restraint, and the tax system has actually been made, in my view, even more nightmarish after 4-5 years by then of coalition. So, I mean, instead, I want to talk a bit about the lessons from the recession and, by implication, the financial disaster that preceded it. I've just spent about 2.5-3 years writing a book on Fred Goodwin and RBS and all those people who helped them blow up the economy. I'm thinking particularly of Gordon Brown, Mervyn King, the FSA, etc. So perhaps for that reason, because I've spent so long immersed in that subject and trying to examine the lessons of what went wrong, I just presumed that it was going to take slightly longer than 5 years for a Conservative Prime Minister to forget the lessons of the financial crash. And to misquote David Cameron, his favourite word of the day today is nuts. I think Help to Buy is absolutely nuts. For a government to forget so quickly the root cause of the financial crisis, once you strip it all away and remove all the complicated talk about CDOs and CDSs and bizarre financial instruments that were invented to make bankers and those who work in hedge funds very rich, at root it was a problem of excessive borrowing and lending. And I think Andrea mentioned Bank of Dave, which is a very admirable outfit attempting to start a new bank. But now since we have the Bank of Dave and George, which troubles me greatly. So the lessons from the crisis, the thoughts that I'd just like to leave you with. Firstly, I think the crisis tells us something really interesting about the dangers of excessive scale, and effectively corporatism and the closeness of very large institutions, in the case of the financial crisis, banks, but it also applies to other companies, and their excessive closeness to big government. Now here actually I think the Tories are slightly behind the curve, and I think Ed Miliband has posed some very interesting questions about this, about vested interests. Now, being Ed Miliband, you can guarantee, as you saw last week, that his responses will be, because of where he comes from ideologically, instinctively anti-market and anti-liberty. But he is at least thinking, about some of those same questions that Teddy Roosevelt 100 years ago in the States posed about Standard Oil, JP Morgan, all of those firms. So I think Conservatives need to start thinking about that. I think that's where the politics of the next 10 years is going to go. I don't think it's enough. I don't think it's enough for the Number 10 operation to be delighted last week that Ed Miliband had big business attacking him. And he had big business, and he had Peter Mandelson. So I mean, he had pretty much the full set in terms of what he was looking for. The second point I would I'd just like to leave you with: British banking system. The jaw-dropping moment for me in terms of writing a book about this stuff was when Richard Davis, of now The Economist, then of the Bank of England, fantastic economist, sent me a chart which he compiled for the Bank of England, which just shows you what happened to banking in this country from the 1960s onwards. And I think when people ask me, why did the crisis hit Britain so hard, why did we have a worse crisis than almost every other developed country, I think that the answer lies in what happened to banking. So in 1960, UK banking system, the combined balance sheets, total assets of the 16 clearing banks, so there you go for a start. There are 16 of them in 1960, there's huge amounts of competition. That amounted to, their combined balance sheets amounted to 32% of GDP. By 1990, so you've had the Big Bang, which is not directly about banking, but it has unleashed a wave of financial innovation, interest in scale, takeover, all the rest of it, all for reasons that we understand. Well, by that point, 1990, when Thatcher leaves office, UK banking is 75% of GDP. By the time you get to 2000, it's risen to 143% of GDP. And now here comes Gordon Brown and the end of boom and bust. In the next 7-8 years, banking absolutely explodes. So the combined balance sheets become something like 6.24 trillion sterling. That's 450% of GDP. So it was always going to, when it blew up, it was always going to go spectacularly badly wrong. We had put far too much faith in financial services and in the idea that they had to be, as well as them having to be bigger, there had to be fewer of them. So the lesson that ultimately that I draw from the entire crisis and experience of the financial disaster is ultimately it's about the need for conservative skepticism, which I don't think is on display in this Help to Buy scheme, and the need for the idea that when a boom is being inflated, and when politicians tell you that they've ended boom and bust, and that there's a model that even the then conservative leadership can sign up to, basically accepting Brown's rules and being bullied into it, that's bad politics and it's very bad economics. And actually, you need to always keep at the forefront of your politics that idea that there is a cycle to these things and that mankind is also prone to manias and to hype. Thank you very much.
Iain, thank you very much. Dominic.
Well, ladies and gentlemen, first of all, thank you very much for coming, and thank you to Mark and the IEA for hosting us. I've got 3 lessons I'd like to touch on briefly, and a few positive ideas to throw into the mix. I think the first lesson that I would draw from what we've been through is that we missed our target for eliminating the deficit this Parliament because we had slower growth and revenue than we'd hoped for. And of course there are international factors that influence that, but it's also at least partly a result of homegrown policy. We've gone from state spending at a little over half of UK economic output in 2010 to spending at just under half. And gross government debt is still, I think, fairly perilously poised at 94% of GDP. For all the scaremongering from the BBC and from the left and all the rest of it, actually the cuts have been relatively modest, and we could have cut more, we could have cut earlier. I think the public understand that, and I think they understand that there is more to come. And I think with public debt and public spending still relatively high, it's inevitable we are going to have to cut further. And so that's something we've got to grasp the nettle on. No point in ducking it or burying our heads in the sand. The real question is how you do it in a politically palatable way. With Democrats, who work through the political system, at least the politicians on this table. Now personally, where I would start is halving the number of separate government departments in Whitehall, because we don't need 2 departments for the environment. We don't need separate freestanding departments for DCMS, as important as some of those functions are, certainly not for BIS, at least with Vince Cable at the helm.
We name it, not the BIS.
Whatever you think of aid spending, and I'm not as hawkish as some of my colleagues, I think DFID should get dovetailed back into the Foreign Office for strategic purposes as much as anything else, but also because actually we just don't need a freestanding department dispensing aid. And that's just for starters. But the broader point I wanted to make is that you can cut swathes of Whitehall, you can cut the bureaucracy without touching frontline services. Let's all understand the political sensitivity around that. And in a paper for Kwasi's Free Enterprise Group, I laid out at least how we could find £10 billion worth of savings if we cut some of those Whitehall departments. And some of that can be used to cut the deficit faster, but some of it can also be put back into the dynamic private sector part of the economy through tax cuts. And of course, if you cut further, faster, sooner, you can create some headroom for a greater supply side shot in the arm. And if you do that, if you cut business taxes, if you inject more money into the dynamic private sector, you can encourage that virtuous cycle between growth and revenue that we are really hankering for. So that's my first lesson. The second lesson I wanted to touch on is that we shouldn't just look at government debt. We shouldn't ignore household debt and commercial debt. We've got household debt currently at 98% of GDP. That's even higher than government debt. And it's one of the major reasons people are feeling the cost of living pinch as well. So it's very practical and very relevant as a matter of politics as well as a matter of economics. We've relied a lot on cheap money from the Bank of England to get us out of this rut. And I do have a lurking concern that we risk at least deferring some problems from zombie companies to households that risk being hit when interest rates go up, if they go up later. Particularly, and I think this is the key risk, if by delaying a rise in rates, we end up having a sharper rise later. That's the risk I'm pointing to. So I think the broader lesson from our own recession, but also from the Eurozone, is that you can't silo debt. You can't silo off government debt from commercial and household debt. And I'd like to see greater recognition of that from policymakers, from Mark Carney at the Bank of England. And if the aim is to defer any rate rise until 2016, I think we've got to use that period to get household and commercial debt down to safer and more sustainable levels. The third and related lesson that I want to touch on is, and again it's one reason for relatively sluggish growth since 2010, is that the banks are still gummed up with bad debt which has choked credit. And others have touched on this, and Andrea and Kwasi know more about the financial, technical side than I do. But the raw truth is UK banking liabilities are 420% of GDP. So they dwarf the government and household debt levels. We are highly exposed to the Eurozone, at least certain parts of it. And whether or not, with hindsight, the last government was right to bail out the banks, just shelving that for the moment, I think going forward, we've got to make sure we're ready to have an orderly wind down of any banks that fail. First, because we don't want the taxpayer to have to fork out again, but also so we deal decisively with those toxic assets, so we can get lending to SMEs back on tap much quicker. And I think the work done on living wills and bail-ins at the moment by the Treasury is very important, not very sexy, not very politically, doesn't get a lot of column inches in the newspapers, but it's very important. And it'd be very interesting to see how the bail-in works with the co-op bank. It will set quite an important precedent. But the wider point about retail banking is the woeful lack of competition, because we've got the monopoly of the big four. And that's, let's face it, a massive regulatory failure that we inherited on a scale, I think, at least as bad as the others that are regularly cited in the media. And I agree with Andrea entirely. I think she's done brilliant work on reducing barriers to entry for innovative new banks. The whole idea of portable bank accounts, I think, extremely important. Partly to reinvigorate the banking sector, but also to strengthen consumer power, allowing customers to walk with their feet if they get a lousy rate or if they get lousy service. And I would like to see, and this is my final offering, so to speak, I'd like to see this as part of a much wider drive on competition policy that breaks up the monopolies and empowers the consumer. And the energy sector is a prime candidate, and I agree with the point Iain was making about this. There is a really important political point for us in this room as Conservatives, as free marketeers. And too often, when the average person, and we knock on doors, the retail politicians here, and we hear it all the time, too often the average person, when they look at British capitalism, they see the banks, they see the energy companies, they think the whole thing smells like some big stitch-up. And that's the fertile ground that Ed Miliband is pitching directly at. And for those of us who care passionately about the free market, the best way to defend it is to press for more vigorous competition, showing it's a system that allows startups to take on the established players, showing it's a system that empowers rather than exploits the consumer, and ultimately showing that capitalism is there for the little guy, not just for big business. Thank you.
Chris.
Thank you, Mark, and thank you all for coming along. Party manifestos are a curious hybrid. We can sit here in this room and sort of talk fantasy politics about what we'd like to be in the manifesto, yet we know, many of you know who knock on doors in many seats across the country, that all this will matter little unless we can communicate that message across the doorstep to voters to actually believe in what the Conservative Party will stand for. It's quite clear now that Linton Crosby has been working, leaving away, and for hard-working people will be our party slogan going into the general election. But what else can we take to the doorsteps? You've probably also seen that pledge card that's come out, given sort of 12 Conservative achievements. I see they're also on big banners all up on the hall. Those will be something we will have to take to the door. But I think we need to go further than that. And we do need to put together ideas that we will be able to sell above all on the door in simple and plain language, ideally in one sentence. And I think the first lesson, what has happened in the past 5 years and beyond, I think when you look at the public's appetite for the state, you recognise that the public realise the state has grown too big. Now, Kwasi spoke about what has happened so far in terms of the reduction of deficit. The very fact is that there haven't been savage Tory cuts. And actually, knock on doors in 2011, I actually had people expecting the cuts to go further, and now they notice actually there hasn't been the change that they feared. The sort of no one's lying dead in the street. And in fact, when you look at the actually fiscally, we're now at a stage where we've cut to 97p for every pound that was spent in 2008. That is not a savage cut. And actually, when we look at what we have done so far, look at our most popular policies. Welfare, for instance. Let's take and break down the state of its entirety. Welfare reform. The benefits cap, capping benefits at £26,000 a year, is actually the most popular Conservative policy. 75% public support for that measure. And yet, in a marginal seat like mine in Kingswood, the average wage is £19,000. Benefits cap is after tax, so actually you'd have to be earning a wage of £34,000 to actually be, as a hard-working person, on a par with someone who has had their benefits capped at £26,000. That just affects 67,000 people in this country. It raises us £185 million. It's not a lot of money, but it is totemic. And millions of people believe we are doing the right thing in capping benefits. But if we actually looked at that cap and reduced it, if we actually went down to 20k, I did a parliamentary question to find out from the Treasury what the savings would be, and at 20k the savings would be £735 million. If we went down to 17k for the benefits cap, you'd be saving £1.3 billion. And I think that is something we can take to the public with us on that particular issue of welfare. Another aspect of the state, I think, that people are fed up with their eye teeth are, is high-paid salaries within the public sector. Now, this wouldn't make a lot of money, admittedly, but the very fact that we have 4,000 people in organisations like the BBC and the NHS earning more than the Prime Minister, really gets on people's wings. And I think actually this might be a vehicle for further reform of public sector pay. And this has a wider point to do with the economics of the public sector. And that's the fact that we could say to organisations or to councils, by all means, cap public sector pay at 150k. If you want to pay somebody more, you go out and raise that money through private enterprise. Now, at the moment, public sector pay generally, across all the NHS and schools, has been capped at 1%. Now, that cannot sustain itself for too long. We will see issues socially with people going on strikes and everything for this. But when you look at a 1% pay cap, that still means it's around about £1.2 billion increase on the NHS costs year on year. I think actually, well, if you want to look at public sector pay, let's not take it from the taxpayer. Let's work out ways in which public sector organisations can actually invest and get private enterprise in order to ensure that we can then raise public sector salaries. And I think when you just look at a manifesto, we've got for hard-working people, minus the hyphen, downstairs as our slogan. But what do hard-working people want? Ideally, they want a tax cut. In my own mind, if I could put my own sort of fantasy politics in about what a manifesto would be to reduce the 20p rate of tax to 19p, find £4.5 billion somehow. But if that's not going to be the case, if people recognise that they're going to be paying the tax they're paying at the moment, what they want is fairness. And with fairness comes the fact that they want to believe that they are paying into a system and they are not seeing other people taking out that system without putting in. And this comes down to the nub of welfare reform that we need to get to grips with in the 21st century, which is how do we create a contribution society? 70 years on from Beveridge, when we looked at a system that was set up to allow individual enterprise to take place within the welfare state, that has disappeared. And we need to get back to a system where actually people feel that they have paid in and the people aren't taking out. And that does come down to the issue of immigration. Now, that may be unpopular when it comes to the economics of the situation, but I think we should be looking at what has happened in America with the green card system. Actually, we can almost solve over the problems of immigration. If we had a system where we had a green card, where those people coming into this country paid tax for 5 or 10 years, they weren't allowed to use public services until that, they put in their contribution, then you wouldn't have the tensions of immigration. People would say, actually, as an immigrant, you've paid into the system just as I have. You deserve to be here, you deserve to use our schools and hospitals as roads, just as any decent citizen in this country. Now, those are ideas that I think would be popular. They may not necessarily be the right ideas, but we need to come up with a manifesto that is not just based around facts and figures and numbers. It is also based around the language, the common, ordinary, hard-working man and woman on the streets. Thank you very much.